In Forex trading, knowing when to buy or sell is absolutely critical. One powerful tool that many traders use to make these decisions is the RSI, or Relative Strength Index. So what is it? RSI is a momentum indicator that measures how strong a price movement is. It ranges on a scale from 0 to 100 and helps traders identify whether a currency pair is overbought or oversold. Think of it like a speedometer for the market's price action. A low number, close to 0, means weak momentum, while a high number, near 100, signals strong momentum. Now, let's talk about the magic numbers, 70 and 30. When the RSI goes above 70, the market is considered overbought. This means the price might be too high and could be ready for a reversal downward. On the flip side, when the RSI falls below 30, the market is considered oversold. This is a sign that the price might be too low and could be about to bounce upward. So how do we use this information? Traders often look for buy signals when the RSI moves up from below the 30 level. This suggests the selling pressure is fading and buyers might be stepping in. Conversely, traders look for sell signals when the RSI moves down from above the 70 level, indicating that the buying frenzy might be over. But wait, there's more. RSI can also signal potential reversals through something called divergence. For example, if the price keeps making higher highs, but the RSI is making lower highs, that's a bearish divergence. It's a warning that the upward trend might be losing steam. And if the price is making lower lows while the RSI is making higher lows, that's a bullish divergence, a sign that the downtrend could be ending. However, a word of caution, RSI works best when it's combined with other tools. You should always use it alongside other analysis methods like trend lines, support and resistance levels, or moving averages. Never rely on the RSI alone for your trading decisions. Always confirm your signals. The RSI indicator is simple, powerful, and widely used in Forex trading for a reason. Master it, combine it wisely with other tools, and you'll be on your way to trading smarter, not harder. Thanks for watching, and be sure to subscribe for more trading tips.